Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway here, Chief Market Strategist at VerifiedInvesting.com. We're going to get into the nitty-gritty, the charts, the analysis, the technical data. We're going to look at various chart setups for trading opportunities today, as always, while discussing the macro picture in the markets. All right, so first and foremost, Monday was a slight down day in the markets. It was kind of a lower open, as we talked about in yesterday's game plan. We floated up most of the day, and then towards the end of the day, we saw some selling reemerge, and the markets ended up closing negative. Now, remember, yesterday and today and half of tomorrow, likely volume will remain light as we wait for the Federal Reserve decision Wednesday, 2 p.m. Eastern time, followed by Jerome Powell's press conference. All right. So again, that's really what the markets are looking towards. They want to hear his commentary about interest rates, inflation, tariffs, the trade war, all of that stuff the markets will be hinging on. And because of that, it could be a little bit of a lighter trading setups or volume in the market over the next day or so. All right, flipping into the S&P futures here, we can see that we are trading down. So this was yesterday, right? We opened down on the day, rallied. We basically went back to about the flat line. In fact, on the S&P, it basically filled the gap perfectly. And then late in the day, you could see just this consistent selling action. Markets closed right here, and we saw, again, a gentle fade overnight, accelerating a little bit in this morning's early period, okay? So right now, the S&P is down about 0.8%. The NASDAQ 100 is down about 1.1%. Now, if we flip over to the daily chart, and again, the beauty of this chart is just astounding to me. So number one, the lows on the S&P right here, notice how it matches the bull market high of 2022, just before the markets had their kind of bear market in 2022. And then also that same low that we tagged here before this big mega-sized bounce, that was the COVID low connected to the lows of 2022. So basically the bear market lows, and then even right through this October 2023 low. And we can see right there, that's where the markets found support. Now, interestingly enough, this is also where max panic was within the investing world, right? And again, always remember that, guys. Oftentimes, and this is a very key point, oftentimes just as the markets are hitting support, retail investors are at their max panic and dumping, because again, generally retail, not you guys, but in general, retail investors are not focusing on charts. They're focusing on their emotion. And again, the emotion is accelerated or heightened because of social media and mainstream media. Remember, mainstream media, and this is an important point, not so much about trading, but psychology, that mainstream media, everyone thinks, oh, you know, CNBC, Bloomberg, all these players, they basically report the facts. I'm not saying they don't report the facts, but remember, the only way they are on TV is if they sell ads, all right? You know, basically commercials. And what you have to understand is that to sell commercials and make money, they need people to watch. Now, if they're just giving facts and saying, okay, markets did X, Y, and Z, it's boring. Listen, I mean, maybe you don't find it boring. I don't find it boring when we're seeing like technicals on the charts. But to create more of a dynamic of fear and greed, that gets people to tune in, and then they get to sell more commercials, and they stay on the air, and they can pay their employees, etc. So you have to understand that those organizations are there to really sell ads, and therefore they need people to watch. Just like social media is the same thing. You know, when you scroll through social media, it tends, and the algorithms actually want to show you controversial things that are going to get you riled up, get you angry, get you, you know, excited, whatever it may be, because that's what's going to keep you on their platform, which means that they can then sell more ad dollars or ad space to advertisers. Again, this mentality is a shift in our brains that we all have to do. And that's what the charts enable us to do, is to focus on the data, not the hype, not the fear, not the FOMO, not all this BS, but focus on data and probabilities. I always stress that in these game plans because I think, again, if you look back at me as a young investor, I wish that I knew some of this stuff. I mean, it literally has been game changing from being a mediocre, probably generally a losing trader early in my career. In fact, there's no doubt about it. I was a frankly bad investor and trader. I did the wrong thing at the wrong time. And then I'd be like, well, what the heck? How did I buy at the highs or sell at the lows? And then I slowly started to notice the charts. And I started to say, holy cow, there's something here. The charts are into support, but look at my emotion. My emotion was telling me to panic, and I was fearful, and I was freaking out. But then the charts told us where the bounce was going to come in. Anyways, not to get off topic here, guys. I want to get back to the charts. But suffice it to say, here was max fear. And one thing I noticed last Friday, we had almost max greed. And I don't mean like all out greed, like all time highs, but for the first time through all of this low and the rally up, Friday was the first Friday I saw people buying into the weekend versus being more hesitant. And again, interestingly enough, there's gap fill right here. Look at that on the futures, right? I mean, literally right to gap fill right there. We know gap fills and technical resistance or gap fills and technical analysis. When you come from the underbelly, that's going to be resistance. And then also we had just pierced the 618. So if you go to the high of your bull market, basically your all-time highs, look, the 618 was right here as well. So Friday we pierced it. We tagged the gap fill, boom, to the downside. Now listen, it's only been a small sell-off, so by no means does it tell us that we're going sharply lower just yet. But again, it's the levels at work. The data here telling us probability at gap fill factored a sell here versus buy was right down here. And again, look at how amazing these long-term trend lines are right in this range. So very counterintuitive to our emotion, but very factual based on the data and probabilities. All right. Flipping over to the QQQ, Q's kind of kissed this little pivot point right here. Again, same sort of deal here. If we look at the QQQ, look at the exact closing level of Monday on the Q's was right here. That's exactly at the 618. And today we're trading down about here as we're seeing about a 1% sell-off in the markets. Now, again, as we fall, as those of us that are technical traders are going to be watching to see, okay, we have a gap fill here. How does the market act here? Does it hold? Does it bounce? Does it go back and make new highs, or does it break, right? So again, this is what I mean by you can't just be like, oh, we just hit the 618 and we just hit a gap fill. We now expect new lows. No, as a technical trader, you take it level by level by level. Now, you can have an overall bias based on bigger time frames, which I certainly do, as you guys know, favoring eventually us going to new lows. But still, on a shorter term basis, we must respect all levels. All levels in general, they'll have varying degrees of power, of macro versus a minor or macro versus a little level. But the point being, again, is we need to still be respectful of all the levels. All right. 10-year yield, talk about a trend line. Beautiful trend line bounce here. Again, what's interesting on this is that you could kind of make a case that we're essentially forming this little parallel zone here. You know, you have this high, and kind of the closing level right here, and that's about parallel with this line. And what's fascinating here is we're coming into a Fed decision tomorrow where the question is going to be is, are we going to see downside back here, or are we going to see basically a breakout to the upside? Now, I'm not going to pretend to know. What I do know is that we are at resistance here. All right, there's a parallel resistance line here. So again, that would say, okay, we have a little resistance, but again, resistance could be broken. But right now we're hovering at resistance through this trend line, which is parallel to this trend line on the 10-year. Now, a lot of people are expecting Jerome Powell to push back on cutting rates. I think he will to some extent, but I also think the Fed is going to say that they're very data dependent, which means if the economy weakens substantially, then obviously the Fed would likely attempt to step in at least a little bit, even in spite of all the tariffs and trade wars and likely uptick in the cost of goods. All right, going to a couple stocks in play. This was one of my favorites here, guys. Palantir. I held a position with the day trading room into this earnings report. I have a swing trade position as well with my swing trade members in smart money stocks and ETFs. I'm going to show you exactly why I felt confident enough to hold it into earnings. By the way, Palantir down about 8% plus on earnings right now. So number one, look at this little pop initially on earnings. It spiked up to about $130. In fact, it pierced 130 before collapsing down. Now, the first thing we have to understand about Palantir is that they beat revenue, they beat earnings, and they raised guidance. And I had so many people saying to me, you know, everyone's saying they're going to just blow these numbers away. Why are you shorting Palantir up here? Why are you short Palantir? You know, and by the way, I read so many articles online, and I'm sure many of you guys did, about how Palantir is the game-changing company and how it's just revolutionizing everything, and they're just gonna do so well. In my head, because I'm a logical investor and I understand psychology, and this is why I tell you guys this, because I want to reveal these thought processes to you guys. In my head, when I read that, I say, okay, the impact of media and analysts talking up at Palantir is that all these retail investors are going to pile in. That means that, again, price is going to go up quite a bit going into earnings. But basically, unless Palantir magically cures cancer, they're going to essentially be already priced in to be raising guidance, beating earnings and all of these things. And so essentially the odds of them going up on earnings was relatively low. Now you can see these trend lines here. I want to show you guys this, right? So if we go here, this was the level. I wrote an article and posted it on our website yesterday saying that major resistance between 125 and 128. It was a double top. And also look at this parallel, pivot low to pivot low, and then the parallel here, and that would be your level hit. Now, during market hours, it doesn't look like we're going to hit that. But if we flip back to the pre-market after hours data, look, we went right there, we pierced it, and then the selling takes over. Okay. Now, again, going back to what the analysts were saying, and basically the retail crowd was just piling in this stock. But look at the move this thing made from the April low. So in less than a month to yesterday's high, it was up 88.8% in a straight line, except for a little bit of consolidation here. Now, again, that monstrously dwarfs Google, Amazon. I mean, all of these other stocks that have bounced, NVIDIA, almost every other stock, this one outperforms. In less than a month, it went up 88%. And so again, what I talk to you guys about and what I stress to you guys about is look at the chart. Even if a company has great earnings, if it's gone up so much going into earnings, the bar keeps getting raised where they have to, okay, well, you know, now it's up 20%, so they better have pretty solid numbers. Now it's up 40%. Now they have to have really good numbers. Now it's up 80%, almost unattainable to be able to maintain your momentum. And remember, then you look at RSI, okay, it's over 70. You got a negative divergence on there, by the way, as well. Like lots of these other factors that kind of show you the same thing. I just try to explain it from a psychological point of view. Bottom line is, obviously, Palantir dropping on earnings nicely here in the pre-market. I did exit my day trading shares already with the day trading room. Very rare I hold anything overnight. In this case, I did. We banked great profits yesterday in the after hours on it. I'm still holding my swing trade because I actually expect this to go lower. I would generally expect this midpoint right here. So if we look at a technical basis here, and I can get rid of this here because, again, that's just a measurement. But if we looked at this, you can see right here, there's this pivot top here, and then a gap fill right down here. So in general, for me, I'll probably take the slight end, which is just a pierce of 100, and then I'll exit that position right there. That's more of my swing trade kind of game plan. But again, the point is when a stock rallies this much into earnings, you have to be very careful. Don't let the media that's posting all these articles about how amazing it's going to be or the hype on social media catch you off guard and get you to buy in at the highs. Datadog reported earnings this morning. Nothing really new here that I see. I mean, again, it popped initially, pulled back. Again, notice how basically yesterday it closed here. It's flat to positive. Celsius reported earnings this morning. That stock dipped initially, rallied back. DoorDash reported. Now they're actually buying a company, and again, they reported earnings. The earnings were actually pretty good on DoorDash, but because they're buying a company which is dilutive to shareholders, then the stock is down just a little bit. CEG, which is kind of a utility company, initially fell on earnings, but is actually rallying back as well. So if you look at this morning's earnings, there's really not a lot of price action that's tradable for us at this point. Ferrari reported earnings. That stock's up slightly there. Marriott reported earnings. Again, no movement on that one. Now, yesterday after hours, Ford did report earnings. The stock did fall a little bit, but not much. They did suspend their guidance and talk about how much the tariffs are going to impact their bottom line. But again, the stock is just down slightly, mainly because, again, if you look at this, the stock is trading pretty close to the longer-term lows. If I zoom out on this chart, I mean, essentially you're almost at 52-week lows down here. Now, one of the things I'm watching on Ford is this parallel channel. And the reason I'm watching this is that at some point, if price breaks above there, that would be a breakout. Now, today it's going to open down. So this is more of a longer term, keep on your watch list type setup. But at this point, if this were to, let's say a month from now breaks out, then probability would start favoring a move to this gap fill. There's a huge gap at 1366. And again, maybe we come all the way back down in the near term here, but whenever this trend line breaks, this parallel breaks, I'm going to keep it on my radar for a long into this 1366 gap fill. All right, going to Bitcoin. Bitcoin is showing a tough time here. It is struggling, folks. So notice this little parallel right here through the lows and right here through the highs. If this breaks and we have a daily close below here, I would then be bearish on Bitcoin until you get down to about 87,700. This pivot high right here, see this midpoint where price rallied up and rallied down, rallied, consolidated, and broke out. That should now become your next downside support. But in the very least, price is starting to look weak here. Notice just as the stock market is starting to weaken as well. So we've talked a lot about, is Bitcoin a safe haven? Is it a risk asset? Again, it still to me is mostly a risk asset, but there's no doubt that when the rest of the world was really mad over all these tariffs, that they kind of went on a buying strike for U.S. treasuries. Treasuries spiked up, and it seemed like some money went into Bitcoin. So it's showing flashes of being a safe haven asset, but I still think overall investor psychology rules, and when people get nervous, they still tend to sell Bitcoin. Take a look at gold today. Gold continues to rally. Remember, I told you guys late last week that I unloaded some of my gold shorts. I still kept just one position, which is okay, but I'm now looking to re-enter a potential short on a retrace. And again, if we look at a retrace, I generally like my fibs here, and the Fibonacci would signal that we are piercing the 618. You got the 786 up here. I haven't entered my short yet on gold again, but I am eyeing it very closely as we get this nice pop. Please keep in mind, I'm short-term neutral right now, but close to turning bearish. Mid-term, long-term, I still think gold goes a lot higher because of the U.S.'s and world's inability to get spending and debt under control. Silver, let's take a look at silver real quick. Silver getting a nice bounce. I got to give credit to this trend line. It continues to hold. Price moving up. Short-term minor resistance would be right here. You can see high pivot to high pivot. And if we can break through there, we should make a run at this high around 34.50. But again, short term, you'll just have a minor level of resistance. And minor levels versus major levels likely are troublesome for price to break through. It'll take a lot of work. It's going to cause a bigger pullback. Minor levels could be like, oh, we just paused there and then broke up, or maybe a small pullback and broke up. The point being is that it just has less traction. It's the difference between a wooden door and a steel door, trying to break it down, right? It's the difference between those two. All right, next up, let's flip over to oil. The bear flag on oil, you can see we again down move almost to double bottom, and now we're getting a bounce. Still no trade for me. This was really the only trade, and I didn't get filled on it. It didn't get quite high enough. So again, there's nothing here to do, but we can still see that oil continues to bounce a little bit off the OPEC news yesterday. And then lastly, natural gas, folks. If we take a look at natural gas here, natural gas, beautiful rejection here. Again, yesterday I talked about a level that was a little bit higher for me here to short, which would be right up here, just underneath $4. We did get rejected at this level, but now we're bouncing up. So if we push through and head up in this range, I likely would take a short level at that point on natural gas, a short trade. But at this point, again, nothing for me, but good rejection of this trend line right there yesterday. Now we'll see if it can continue to climb up. All right, guys. So listen, Overall, markets pre-market are lower. We'll see again, does it have teeth today, or is it just a light volume kind of nervousness ahead of the Fed tomorrow? After hours today, I believe AMD reports, so Advanced Micro Devices, a semiconductor company. That'll be interesting to watch as well. Don't forget, I launched the options trading service or options swing trade service. Put out 2 alerts yesterday already, 2 options trades that I got into. So awesome there. You guys can check that out. And of course, as always, folks, I'm going to do my best to always educate you and enlighten you guys in these the right way, not based on hype, not based on emotion, but data and probability. You guys go have a great rest of your day. I'll talk to you soon. Take care.